Welcome to a VSA Capital video blog. I'm delighted to have with me today Mark Routh, the CEO of Prospex Energy. Hello, Mark. How are you?
Hello. Nice to have you.
Now, you must be pretty pleased, actually, because although it's the middle of the summer and markets are very tough, you've just actually raised a convertible bond, £1.87 million at a premium price of 4.25 conversion with a 12% coupon. So, well done. But also, why don't you explain why you wanted the money?
Well, the main reason is we're developing a suspended gas well where we drilled a discovery well in 2017 in the Po Valley region of northern Italy, where the operator is Po Valley Energy. They're listed on the ASX. We're listed on the AIM. And we've been waiting for permits to develop the field, which are imminent. And unfortunately, the supply chain and energy costs have gone up so much that we've had to increase our share of the capex required to tie the field into the grid. So that's why we needed the money.
Now, if you say at the moment gas and Europe, it all becomes very exciting, obviously, with the current situation in Ukraine. But where exactly are you in the development of this field? I mean, when do you hope to be able to produce first gas?
So first gas is scheduled for May 2023. Now that is a conservative estimate, but the operator is trying to get it done by March 2023. All we need to do is to connect a pipeline from the wellhead to the gas grid operated by a SNAN, the network operator in Italy. It's a 4-inch pipeline. It's 800 meters away from the wellhead to the pipeline, and that's what we have to do to get it connected. Unfortunately, the Italian ministry takes a while to do things. One of the things we have to do is seismic monitoring for 12 months prior to gas production to make sure that we don't cause an earthquake when we produce a 13 BCF gas field. That's the law of the land, so we have to do that. And that seismic monitoring started in January and will finish in December.
Okay, so you're actually going to be in cash flow from this gas field pretty quickly. And I think in your presentation, you actually give some numbers on that, which are really quite significant. I mean, presumably at the moment, as you say, it's fairly simple to put it into production. And presumably there's a lot of demand for it in terms of an offtake.
Indeed. So gas sales will be phenomenal when we get there. I mean, the forward curve, the gas prices in Italy are based on the TTF, which you can see on the ICE website. And TTF gas today was 185 euros per megawatt hour, which in sort of English money is 470 pence per therm. I mean, this is just nuts. Now, the forward curve for calendar year 23 is a bit more conservative. That's 146 euros per megawatt hour, but that's 365 pence per therm. I mean, that's probably not sustainable. But we have done some economics based on the forward curve and discounted that for what is likely to happen in 2023. And you know, it's going to be in the region of 100 euros per megawatt hour in 2023. And with those numbers, we calculate our cash flow is going to be in the region of 8 million euros per year post-tax net to Prospex, and that will decline to maybe 5 and 6 million euros per year for 10 years thereafter, depending on what the gas price does. So that's not bad income. I mean, that's what, £5-6 million per year net cash flow for a £10 million market cap company. You can go and figure what that might result in.
Well, it makes you look incredibly cheap, but also in truth, there is further upside potentially in Selva as well, isn't there? So, I mean, it isn't just this, there's potential upside on top of it.
Yeah, well, that's right. I mean, the CPR numbers, the Selva field is 13.4 billion cubic feet, 5 billion cubic feet net to Prospex. But there's the upside, which is on page 9 of our corporate presentation. There's a structure called East Selva, which is not yet drilled. That map has the Selva field that was drilled in 2017 in red, and in green to the right-hand side of the map, there are some prospects. The biggest one is East Selva, which has got 35 BCF. And I'm in discussions with the operator Po Valley that would be the next structure to be drilled, subject to permits and basically funded from cash flow from the field. These wells are not expensive. These are sort of 3 to 4 million euros gross. It's a shallow reservoir in the tertiary at around 1,500 meters. So they can be drilled quickly, subject to obviously mobilizing the equipment and getting the supply chain.
And just out of interest, do you have any issues with the supply chain and getting equipment at the moment? I mean, obviously it's...
Well, I am in discussions with not only our operator in Italy, but also in Spain about pre-ordering wellheads in particular, because the order time for those can be up to 18 months. So we need to get pre-ordering stuff while we wait for the permits. And if we can do it in the right schedule, we should be able to drill East Selva in 2023, late 23 or early 24. And the good thing about that is, because it's in the production concession, which is about to be granted, we don't have to go through all the environmental thing again, because it's a production concession which is granted. So all we need to do is permit that one well, and we can drill and get it tied into the grid where we've already got the tie-in.
I mean, it sounds pretty exciting just on this one area, but you've also, of course, as you just mentioned there, you've got Spain as well. Why don't you just quickly explain what you've got in Spain? Okay,
so on page 11 of our corporate presentation, there's a map of the concessions where we have 3 concessions in El Romeral, 1, 2, and 3, which are producing gas into a power station. And on the map, the power station is located roughly where the Sevilla 3 well is located. And that power station is producing electricity into the spot market from the gas we've got from our local network of the pipelines from the fields, which you can see on the map. The main wells, El Ciervo 1 and Sevilla 1, are producing gas. The power station is actually only at 20% capacity. We've got three generators, 3 turbines. One of them is mothballed, and we've got 2 which are operational, but we can only operate 1 at a time because we don't have enough gas. So we're at 20% capacity, waiting for permits to drill infill wells, of which we have 11 targets, 11 selected targets on page 12, where just 2 of these wells, when they're drilled, could bring the power station up to 100% capacity. So whilst we're generating 2 megawatts at the moment, we could be up to 8 megawatts with just 2 more wells.
And again, probably selling the power at really rather good prices, I rather suspect.
Well, yes. I mean, when we bought the asset in March 21, electricity prices were 50 euros per megawatt hour. They're now at 150. They peaked at 700 in December. So income at Taba, these are gross numbers, income at Taba, which is owned 50-50 between Warrego and Prospex, is around 300,000 euros per month. We peaked at 500,000 euros in March because the prices went nuts. But what we've got now is, even with the gas price cap imposed by Spain, the Spanish government, the electricity prices are 150 euros per megawatt hour, and that gives us income, as I said, around 300 to 350,000 euros per month. So we're sitting on a cash pile at El Romeral, and we're using that cash to reinvest. So we've got solar panels being installed on the roof right now. We hope to have a solar panel farm adjacent to the plant. We're doing feed studies on that. And of course, the money that we're saving there is going to fund the wells. The wells here are even shallower than in the Po Valley in Spain, in the tertiary at 900 meters. So the cost of a well is 1 million euros gross. So yeah, we've got some upside to drill here, and we can get producing more electricity pretty soon.
So it really is pretty good, isn't it? You've got 2 Southern European operations, both basically going to be cash generative, or throwing off huge amounts of cash in truth, by should we say the end of next year, because there's a bit of a ramp up phase. I mean, your share price so far, actually in the last year, has been pretty strong. And I guess that, you know, if you actually look at it on the face of it, you look extraordinarily undervalued, which is why we're able to do a nice convertible at a premium. But I guess also, you know, in the current environment, although you're ideally positioned, there's still a slight nervousness of buying into oil and gas stocks just because of the whole sort of green lobby. And of course, as you pointed out, your market cap's still quite small, so you're not quite in the institutional sort of bracket yet. But I mean, I guess you're hoping that as this progresses, you go into cash flow. Actually, we and it's our job to a certain extent at VSA start bringing in institutional investors, because I mean, this is going to be a fantastic cash generator, and you'll be either able to, frankly, you'll either got to pay out a huge dividend, reinvest it and grow the business even more, even potentially, I guess, go off and do some acquisitions. I mean, the world is your oyster, isn't it?
It should be. Acquisitions are on the cards. I'm actually have been talking to some people, nothing in the bag, but you know, you get approaches, you get discussions. We've got some business development opportunities we're already evaluating onshore in Europe. Our focus is onshore Europe. We could look at offshore, but the costs of offshore, obviously, you had to add some noughts on the end. But yeah, with institutional investors, the world's our oyster. I've been here before. I've done offshore. My background is gas. That's what I like to focus on. And I can't finish before we mention one of the blue sky upsides in Prospex, which is the Tesorillo project. Now, that is in southern Spain. It's on page 13 of our presentation. Tesorillo has got an independently verified gross prospective mid-case resource of 831 BCF. And this is a big gas field potentially. What happened here is that in 1957, a well was drilled. It flowed gas to surface. It was suspended. Warrego is currently 85% with Prospex at 15%. We have an option to increase our share to roughly 50-50 with a payment of 1.7 million euros ahead of drilling a well. We intend to do that. The trick here is the license was suspended in the last few years because of COVID, and we're hoping to get that unsuspended and converted to a production license. Yes, there's some time to go there because, again, Spanish authorities can be rather slow in responding to environmental impact assessments. But we hope to be drilling there, and all we need to do is drill a shallow well again, around 1,000 meters, to prove up that big structure. And if we've got that, we can be producing gas because there's a pipeline that traverses the permit, and there's export routes are there. So we could help the energy crisis in Spain and in Italy, a small amount, and we can reduce the imports of liquefied natural gas where the carbon footprint is 30 times worse than local indigenous gas. So this is a good story. We've got a good ESG story as well. Gas is a transition fuel, and that's what we need to sell, and that's what we need to do.
And as you say, I've obviously known you quite a long time, and you do have a very good track record, actually, of working in companies that have been very successful in the gas industry. So I have absolutely no doubt you won't be again. So I suspect you've now got, hopefully, people salivating about the prospect of Prospex, and because it is incredibly exciting. And look, if anybody wants to know more information, I'm sure there'll be more news coming out anyway in the next 12 months as you get this Italian field up into production. But obviously, you can always contact VSA Capital or the company directly to get more information. But I think it's such an exciting story, and it's going to be onwards and upwards, Mark.
Thank you very much, and let's hope so.
Thank you.